Tune in this week. Alex and I are going to cover a potential liquidity crisis, and we're going to cover the evidence starting with...
Looks like it's starting with crypto. Bitcoin down over 50% from its peak. The rest of the complex down even more.
Wow. And you've got the derivative gambling. I did want to get that in there.
That's right. Perpetual futures. How does it impact markets and you?
Well, private credit redemptions.
IPO billions ahead. SpaceX, Anthropic, OpenAI. How much will they suck out of the market?
90-day credit card delinquencies are flashing a warning sign. We'll cover all that this week, and join us for the podcast. It could help you navigate the next crisis. Welcome to the June 8th, 2026 Advance Report for McGowan Group clients. We're grateful you've tuned in here at McGowan Group Wealth Management. I'm Spencer McGowan, joined by Alex Tolene, radiating excellence and brilliance. And Alex, we're going to cover the potential liquidity crisis that's already unfolding in some pockets and what you should do about it.
Yeah, well, Bitcoin's already there, right?
Okay,
so
well,
here's a chart of Bitcoin.
Can I cover the categories?
Yeah.
All right. We've got the crypto warning. We've got derivative gambling, which will cover crypto, then some derivative gambling. Private credit redemptions, IPOs for billions of dollars for AI coming. That's going to suck some capital out of the markets. And the AI data center build out related to that. And then a little warning sign, 90-day credit card delinquency. So we're about to cover all that. Cryptocurrency, getting your face ripped off in the house of pain. People are tapping out. Alex, this chart, that's big. That's 126,000 a coin now. Looks like this weekend will go below 60,000 a coin.
Yeah, so the narrative around, hey, you have to own Bitcoin, it's digital gold. Nobody knew how to price it. They probably still don't know how to price it. And this just looks weak. It's a total house of pain. And you're seeing it come out in some of the Bitcoin treasury stocks as well.
Yeah, 44%. Okay, so let me frame the market, and then we're going to look at something that we told people to not to. That's why you want to subscribe to McGowan Group Wealth Management's YouTube channel. Just say YouTube McGowan Group. Click the subscribe button. And if you like the broadcast, let Alex and I know when we do a good job, because we work really hard to get ready for this. The whole team, we got the team of 9 that cares. We love our clients. This is proof. And we spend all week long on the charts, graphs, headlines, and strategy. And this was a to not to a year ago.
Yeah.
We were saying don't be falling for $126,000 Bitcoin. And we even said maybe 20,000. It might be worth a speculation, but it's still just a computer file. Now, it is a house of pain. Let me illustrate.
Okay.
So Bitcoin down 44%, right, just in the past year alone, okay? So it's 44% decline. If we go back a year, right about here, 44%. Ouchie. But take the top 10 cryptos. Top 10. Okay, the biggest ones, most credibility, not the trash coins that people just pumped and dumped. But out of the top 10, you've got declines of 75%. You've got declines of 50%. The average decline is well over Bitcoin's 40% plus decline. So everybody that was doing the crypto, what are they thinking now? And there's still leverage in that market.
Well, yeah, you had a big piece move to AI. Now you have some other things going on.
This to me is a big unraveling.
So this is what we said to not to. It reminded us of the trust companies in the 1920s who would borrow a bunch of money and then go buy the hottest items, right? MicroStrategy, Michael Saylor, pioneered the idea of having Bitcoin treasury reserves. And that was great. and he borrowed money to buy Bitcoin, and he sold stock to buy Bitcoin.
October of 24, everybody loved it.
Yep.
You're going to lever up, you're going to borrow money, you're going to sell stock, and you can put it all in Bitcoin. Bitcoin going to go up, and that's going to be good. This is $100 billion of capital gone.
Down 77.5% in that time frame. The warning was at some point, if the value of the Bitcoin drops enough, MicroStrategy could end up in a liquidation scenario.
Yeah, if you have
We're not there yet, but it looks like it could be coming.
Well, they had to sell some Bitcoin to make their preferred stock payment, right? That means you're having to sell stuff to make your debt payment. So they're in there in the House of Pain pawn shop saying, would you take some of our Bitcoin? And if they're one of the biggest owners and they can't afford to make their debt payments.
All right, I have a warning. MicroStrategy came out with a preferred security called Stretch. There's all kinds.
That was a stretch.
That was a stretch, right? Pays 11.5%. In
11.5%.
In the document.
That's desperate money.
In the document, it says they can change that at any time.
No way.
My prediction is that they cut that to zero at some point in the future.
Oh, it's just a preferred stock, so we don't even have to pay you.
Right.
Because we want to hold our Bitcoin.
That's right.
Yeah.
But thank you for your money, and sorry things didn't go the way as planned.
All right. Well, we got some unraveling to do there because this is no fun.
You got the Asian version here, Meta Planet.
Turning Japanese now.
That's right. They had it all figured out. I got phone calls from people saying, man, you got to look at this. It's a Bitcoin treasury company out of Japan. They're doing amazing things. They got the smartest guys in the room. And I looked at that and I said, well, Spencer taught me that things trade to what they're worth eventually. And I was trading at 400% premium to the Bitcoin holdings
that they
owned. You could be 100% right on Bitcoin price and still lose money in a scenario like that. I said to not two, down 88%. Whew, that's a house of pain.
See, if I could go back and preempt my big mistakes, right?
Yep.
Like if I had talked to Papa Dean or even other team members and preempted some of my biggest mistakes, then I would have a bigger pile.
That's right.
Right? And that's why sometimes the real value of a wealth manager and a wealth management team is you can bounce things off of them and say, hey, I'm about to do this. What do you think? And they say, well, here's the good or the bad. And that way you have a sounding board. AI data centers. Oh, we were going to cover private credit redemptions, but also derivative gambling. I think the Bitcoin people and the MicroStrategy people, all these people, I think they're over there at Kalshi. Tell us what they're going to be doing next in the derivative market at Kalshi and Poly Market.
All right, so you have a new instrument that's come onto the scene called a perpetual future. Now, it's a derivative. It tracks stock price or index price or whatever index that you want, but it doesn't have any delivery or actual physical ties of settlement to the underlying security. So basically, it's just a tracker. The good news is you can get 50 or even 125 times leverage. I don't know. What could possibly go wrong with that?
Well, you bet on the S&P, it goes down 1%, you're 125 levered, then it's gone.
Yeah, your money's gone.
The
it's
money's
a quick
gone.
way. I call it the return of the bucket shops from the 1920s.
All right, now we're going to cover what to do about this because the markets, danced briefly into all-time highs this week.
Yep.
Then they started beating on the memory stocks. You could see that here at the end of the week, right? They were saying, wow, these things went up so much so fast, maybe I'll take a little profit. Well, if there's a potential liquidity crisis, right? And we're going to show you some more about the potential liquidity crisis. What do? Well, first, you use some of your profit to pay off any debts, right?
Sure.
Ideally, you want to be debt-free. That's always a goal. And then second, where do I get the money? I harvest. We do partial harvest. We did a partial harvest last week.
Yep.
And, partial harvest, raised safety and income, tactical safety. We've got some good choices for that and good, safe bond choices. But you want your tactical safety moving towards 20 or 25%, maybe even 30%, depending on how high things go.
Right.
Because they don't ring a bell.
Yeah, we call it the tree and the fruit harvest strategy.
And we do it in the portfolios automatically.
Yeah, we do it automatically in the
So
portfolios. For those that have highly concentrated positions, we'll have a 2 or 3 year kind of framework where we do the actual planning and said, okay, here's how we're going to do this, so you know what to expect.
Then Dow's up. Okay, so we got NASDAQ up 18%. It was a little over 20, right? Hit the memory stocks. There's the Dow, hit 51,700 briefly at the intraday high this week. So it's an 8%. Those are very healthy returns. But when do you do your tax loss selling?
Boy, you probably ought to do it at a high point when...
It's a high point.
Yeah.
Okay, so what's not working in the portfolio, we're going to do this automatically in the model portfolios too. And that is, you want to say, everything's at a new high. I don't want to wait till the fourth quarter in December when everybody else is doing their tax loss selling, because if I have something that's underperforming now, it'll probably get pounded in.
That's right. It's going to get worse.
As a matter of fact, I may turn around and be a buyer if it's a good thing.
Yeah.
But anyway, that way you'll have some cash for potential bargains at the end of the year.
You got to tune in at the end of the year where we cover Papa Dean's year-end trading package strategy.
Year-end trading package.
Yeah.
Whoa. I'll subscribe to that. Now, whoa, private credit redemptions. This is Blackstone. Now, they're down 40% from the peak of September 2025.
Mm-hmm.
Now, Blackstone is smart and fancy, all right?
Yep.
I'm not saying that they're in trouble, but I am saying with private credit, they had more redemption requests, and this is why we said don't do the private credit, right? Tells you you're going to get 10% or whatever. And then, but if you want your money, you can't get it. As a matter of fact, they only redeem 5% of the fund every quarter, and redemption requests were more than double that.
You know what this reminds me of?
What?
The Audis of the 90s. You know what the story was?
What's Audi?
Once you get any, you can't get outie.
Oh, okay. All right.
That's what this is, right? It's like the Hotel California. You can check in, but you can never leave.
Well, it's just going to be hard for them to raise more money for private credit. Here, everybody's like, oh, I want private credit. It's just going to make it harder because they sold a Seattle office building 54% below what they paid for it.
Yeah.
I'm sorry. They sold it at 54% of what they paid for it.
Yeah.
So that's
Either way, it's not good.
not good. And if there was private credit on the other side, they took a write down. Blue Owl down 53%. And of course, here's the private equity heyday when they're expanding big. But now the investors are saying, no more private credit. Wall Street Journal this week said, we're going to raise this. The private equity companies are raising the standards so the lower end of the private credit borrowers aren't going to be able to refinance.
That's right.
Because they raised that standard. So we just illustrated two liquidity crises, the crypto warning and, of course, the private credit warning, saying be careful because the AI data centers are sucking all the capital, right? You got the big IPOs coming up, SpaceX, Anthropic, OpenAI.
Right.
Should I buy it? I don't know. You could maybe trade it. But SpaceX, according to Morningstar, is overvalued by double.
Yeah.
Now, it may trade up from there, right? But consider it as speculation because of the profitability versus what you're paying. As a matter of fact, the first estimate was 90 times most recent year's reported revenue. Now, revenue's gone up, but 90 times earnings is expensive. 90 times revenue,
That's super expensive.
that's a lot.
That's space stratosphere expensive.
Stratosphere. Then Anthropic's going to come along, OpenAI, and they want $50 or $100 billion from the capital markets.
Sure.
and everybody's building out the data centers, and that's a big expense. People writing checks. Figure out who's going to get checks and who's going to write checks, and you want to invest in people that are going to get checks in the AI data center build out. And what is the most readily available source of quick power for a data center?
Natural gas.
Natural gas. Oh, that could, they're going to get checks.
That's right.
From the data centers. I like that. Now, another liquidity issue, right?
What's that?
Wall Street Journal working overtime to say things are bad because they don't like Trump. I get that, right? But because you got to filter if somebody's perspective is driven not by data but by perspective. But here's one thing they got right, and this is a little scary. Another reason to raise some liquidity. Cash could be king, and you want to raise that percentage cash in the portfolio, taking some profit. Look at this. So this is back in 2003, right? Credit card delinquencies begin to skyrocket. Of course, 2008. Delinquencies reached almost 14%. Right now, we're over 13%, and that's the highest since right after the Great Crisis. What does that mean? Well, let's look at the other things. Auto loans, well, these are mortgages. The mortgagers are saying everything's fine.
Right.
Right? That's near historic lows. You got auto loans. Okay, which one? Auto loans. There's a little warning sign there too.
Yep.
Right? These are 90-day delinquencies. Well, you're 90 days late on your car, they're going to come, the repo man going to come take it. So that's about a 6% rate. So these are warning signs, and they say at the lower end of the economy,
that's right,
the gas prices have stretched, and so how do you exercise that knowledge in a portfolio? Well, thank you for tuning in. We'll be back next week with your update, and you can reach McGowan Group Wealth Management. It is themcgowangroup.com. Contact us there. Set your time for a brainstorming, and you can meet the whole team if you come down to the Crescent where we serve affluent families. We're grateful. See you next week. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio, and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.